Hey, what's going on, guys? This is Tex. In this video, I want to talk to you about Fibonacci retracements and a particular method that I learned from, I believe his name is Blake Young. He's with Shadow Trader. You can check out the Shadow Trader YouTube channel. He makes a video every Tuesday on the markets and focuses a lot on Forex, which I don't really trade, but he has a unique method of using the Fibonacci retracement tool that I was actually surprised how well it does work. So I wanted to share that with you today, but full credit does go to him. This is definitely a method that he employs. And so for this particular example, we'll look at the Nasdaq Futures. If I'm not really going to get into exactly what Fibonacci is, it's something that is used in a lot of areas of life, but traditionally you would, a lot of traders would use Fibonacci retracements for something like this, where you have a high that's put in and then you have a pullback. Same goes for inverse if you have a low and then a rally. But in this example, you would draw from the high to the low because the trend is down here through this period. And then that would give you potential retracement levels, the most popular ones being the 38.2, the 50, and the 61.8. I've covered, Fibonacci retracements in previous videos, but I just wanted to show you this is traditionally what you would expect to see from a Fibonacci retracement tool. What I'm going to do is just remove that. And the method that he uses actually looks at different coefficient levels. And it's especially useful when you have something that's trading at all-time highs because, clearly when you're at all-time highs, there's no known resistance levels above you. So it can be hard to kind of know where something will eventually find resistance. And you can use things like Fibonacci extensions for this as well. But his method actually uses the Fibonacci retracement tool, and you use the previous month to kind of project price levels into the current month. Okay, so in order to do this properly, you're going to need to use Thinkorswim, because what we want to do is we're on a daily chart for this example, the Nasdaq Futures, but you could use this on stocks and pretty much any instrument. So you want to go to your style menu, go to chart mode and monkey bars. And what we have here is essentially like the market profile. This is showing the distribution of where trading occurred. This is the month of October, and here's the current month of November. And so if the stock or the futures or whatever you're tracking was trending up, then you want to draw from low to high. If it's trending down, you want to draw from high to low. In this case, it was trending up throughout October. So we want to choose the Fibonacci tool, and we're just simply going to quickly draw from rough low to high, and then we will just go to edit properties and adjust it so it's exact. So we'll look at the high and the low here. When we mouse over the month of October, we can see that the high was 81.41. So we'll manually type that in, and then the low was 74.74.25. Okay, there we go. Now you want your coefficients to look just like this. Your main coefficients are the 0, the 20%, the 50%, 80%, and 100%. And then essentially you have those duplicated to the top side and the bottom side. Okay, and you can modify the colors and the style however you see fit. This is how he does his, so I've basically emulated what he is using, the way he does it. And so this is very important. You put the coefficients in just like that, and then once you put in the exact high and low values, we press OK. All right, and so now we have our Fibonacci drawn. And what we want to do here is when we look at the market profile, we see that this green highlighted level here, this is showing us essentially where the fair price of doing business was for the month of October. In other words, where the majority of trades occurred. Okay, and so if we look at this, we essentially need to calculate out our price projections for the current month from last month kind of fair price area. And so it's really important. We look at the 50% level here, and it's actually underneath where that fair price area was, and we're thinking that the fair price area should have been more down here, but it was up here. So we need to calculate for that difference. So what we do is we go to our Fibonacci extensions tool. Okay, and this is really important that we start out right here at the 50% level. We click one time and we bring it up here into the middle of that fair price area, right about there, and we click another time, and then we bring it up here to the 0%. All right, and we just overlay that as close as we can get it. There we go. And now we've drawn our extension onto the chart. Now we want to right click on the Fibonacci drawing and go to activate drawing. And we're going to just drag this so the 0% is up here overlaying that 200% on the extension. We'll just get it as close as we can. There we go. And now this is also important. We want to grab the point here at the bottom, down here at the 100%, and bring it up to where that 50% was. Remember, the 50% was here. That's where we started our extension. So this point needs to come up to where that 50% was. So we just compress it just like that, and there you go. Now we can come in here and right click and just remove that extension tool. We no longer need that. And now we have our price projections for the month of November calculated from the month of October using the market profile here. So we can go back to style and choose our standard chart. All right. And so what this is showing us is essentially areas of overbought and oversold areas, as well as potential price targets where you could kind of expect that the stock or the futures, again, whatever instrument you're tracking, is likely to go. Now, it's especially useful, like I said, when something is trading at all-time highs, when there's no clear resistance overhead, but it's still useful even if you're trading within existing areas of support and resistance. So in this case, we drew this price projection fib on here based on the previous month, and we can see that what happened is we traded up into this 0% area, and that is where we so far have found resistance. So the way you can look at this is everything in between your 20% and your 80% is kind of considered fair price. And then when you start moving above the 20% and into the 0% and really up into the next 20% level, so right in this area, you're kind of considered overbought, and on the downside in this area you're considered oversold. So it's no surprise that as we traded up higher here, and there's no resistance levels up here, we're at all-time high, it's no surprise that as we come up into what would be considered this overbought zone, we are starting to find some resistance. And so it makes sense, how this kind of works out. It's actually amazing to see how well it does work. And if we compress this, we can see that if we were to just trade sideways in this overbought area and we don't really pull back, essentially we hold this 20%, which you can see we pulled back off the zero, and so far we're holding that 20%. If we manage to hold up in this area, eventually, traders would find more acceptance at these higher levels, and then buyers might step back in, and it might push us up into the next fair price zone, as you can see here, between this 20% and that 80%, with possible resistance coming in right there at the 50% level. So as of right now, we're sitting in kind of an overbought territory. So the question is, does the market pull back, maybe come back down into this previous fair price zone and find some support into that 50%? Or do we just trade sideways, find acceptance in this overbought area, and then move into the next fair price zone up here? All right. And so, kind of look at this as like a roadmap. It's giving you a general idea of where the stock or the instrument that you're tracking is likely to go, but it's not a trigger on its own. You should never be taking a trade just based on one indicator or one level. Ideally, you have multiple pieces of the puzzle, if you will, coming together to give you a narrative of the probability of what something is going to do and give you, the kind of conviction that you need in your particular trade idea. So we see that we are moving up into this overbought zone. That's one piece of the puzzle. When we look at the daily chart, we see that our MACD is crossing over. So we're starting to see a crossover in the MACD, which is indicating a possible sell signal on the market. And that occurred obviously because we did pull back from there. So you start piecing together multiple things that builds your narrative on what is likely to happen and gives you conviction to eventually work up enough reasons to actually trigger a trade. In this case, we might be looking for a short trade and a possible retracement down into this 50% retracement level, which is back into the middle of the previous fair price zone. All right. So again, this is something that, he uses. So again, full credit goes to him. I just wanted to share it with you. I've been kind of back testing it for a few months now. It seems to work particularly well in the futures market, but I've used it on stocks like Apple, Amazon, and it works pretty well in those as well. It's something that you maybe play around with, experiment, and see if it's, for you. But again, it's just one piece of the puzzle. It's not something that you want to necessarily say, oh, we're into an overbought zone here, so I'm just going to short it there just because we're into this overbought zone. Obviously these levels are reference points, a guideline. It's not a set in stone resistance level, but it can just give you a roadmap of what's likely to happen, and then you build your narrative from that. All right, so hopefully the video was helpful to you guys. If you have any questions, feel free to post those below. I always try to answer any questions that you guys have. And as always, I appreciate you tuning in. Hope you're having a great weekend, and we'll catch you guys in the next video. See ya.